A very good morning, guys. You're most welcome to today's market snapshot. Today's market snapshot will be the final snapshot of the year. So I believe it's going to be a very lengthy discussion with you, because I think it will be the final time that I'm meeting you guys for the snapshot. So if you have any questions to ask me, any analysis you think I should do, today would be the best time for us to go over it as we prepare to wind down the year. So I hope you're all having an amazing time today. Today is the 20th of December 2023. We have about, in this week, we have 2 days left, 2 days left of this week. Then also we have 5 days of next week, which of course means that we have about 7 days left, trading days left until the end of the year. It's been an amazing year this year. Lots of things have taken place. Yes, hey, Just Squad, thank you for joining. So a lot has taken place this year. And of course, I can say the year is ending off on a very, I would say, risk-on mode for the markets. Very strong upside for a lot of risk-on assets this year. We've seen gold, breaking historical levels this year. Last week, we saw the indices breaking historical levels, breaking to levels that they have never been at before. And of course, this has a lot to do with the current risk-on that's in the markets. Traders have been asking themselves, what is really happening? What could break the markets? There does not look like there's anything in sight that can break the markets. We are seeing the fear index at levels it has not been at since pre-COVID, back to 2019. So if there are a number of us that have been wondering what's happening with the stock indices, what's happening with some of these currency pairs, what's happening with Bitcoin, why are things really rallying immensely strongly, has a lot to do with the fear. This year, it seems we are going to have fairly strong Santa Claus rally. There does not seem like there's anything that's going to stop that party from taking place. Now, I just want to start by speaking about last week. Last week, of course, came as a surprise to me, came as a surprise to many traders. I don't want us to pretend. We must have been very surprised by the stance that the Federal Reserve Governor Chair put out there, that is Jerome Powell, indicated for the very first time on the dot plot, we're able to see that the Fed is actually going to, is projecting to actually do about 3 rate hikes in 2024. I don't have access to the dot plot here, but the major spike we saw on a lot of the pairs, the Euro USD, GBP USD, we saw spikes on the indices. Dow Jones right now is trading about 600 points above its all-time high, actually roughly 800 points above its all-time high. The DAX still fairly above its all-time high. NASDAQ broke all-time high. Okay, we have a lot of things breaking all-time high. The SPX, S&P 500, broke all-time high again. Oil also fairly trending lower there. We are seeing also the Euro stock 50 all-time high. So we're seeing a general trend of risk on, and of course this is because one of the world's biggest economy, which of course is the US economy, has had their central bank hinting for the very first time in the past, since 2022, that they are potentially going to have a policy shift. So yesterday we had the Bank of Japan meeting, and of course the Bank of Japan indicated that they are not yet ready to shift from the negative interest rates. So the prelude to the Bank of Japan conference, which we had yesterday, the markets were actually potentially pricing in the first hawkish stance from the Bank of Japan, the very first in over 8 years. That didn't happen. Okay, that didn't happen. And of course, for those of you that were trading during the Euro session, you must have seen very nice opportunities for actually trading the JPY pairs. And I'm thinking, yes, if you will go on the charts and you see how some of these pairs are doing, most especially GBP JPY, and of course USD JPY, Euro JPY, AUD JPY, most of them were up between 300 to 400 pips yesterday on the news that the Bank of Japan was not going to shift from their negative interest rates. Now, in addition to that, the central bank governor, who is Ueda, also indicated that they see a need to still keep with their accommodative policy. So what we need to understand as traders, and of course, I can reason with the Bank of Japan, it might be very tricky for them to see that they seem to be in a position where they cannot shift from the current accommodative policy that they are in, especially now that the banks on the other side of the world seem to be now joining Bank of Japan with a kind of decision that it's taking. So traders and of course a lot of economists have been indicating that the Bank of Japan could possibly maybe shift from those negative rates around January. And we did not get any indication of any kind yesterday that they are going to do that. Okay, so if you're trading any JPY pair, I can say the directional bias is still firmly bullish, and we could potentially see it fairly moving up higher. Now, next year, we have the US elections, and I needed to make sure that I mention it because this, of course, is for traders is very, very important for you to understand that the year we are going into, which is 2024, is going to be a year of elections. The last time we had the US elections was in 2020. That was during COVID, and we had Joe Biden actually winning that election. And this time round, we still have Joe Biden, and we also have a few other candidates. Some of them, of course, you can be able to see them here. Usually, I track elections from CNN because they will be able to give you very strong indication they'll give you sort of like a minute updates of what's really happening. So the candidates are very many, but I would say the favorites are actually Joe Biden and we have Joe Biden and then Donald Trump. Those are the favorites. And I'm thinking, should we get any kind of movements in the markets, it will have a lot to do with the election. But we're going to build on this as we go into next year. So generally, of course, 2023 has been a fairly bullish year for a lot of things. When you check on a lot of things, especially like the tech stocks, many of them are ending the year on a fairly strong note. If you look at Apple, if you look at stocks like Meta, many of the heavyweights are actually ending up quite strongly. Apple is up about 60% on the year, and it seems, especially now that the fear index is down as much as it is to pre-COVID lows, there doesn't seem to be any kind of a risk event that can occur. Despite the headlines we've been getting from what's happening with the Houthi rebels over in the Red Sea, there has been some kind of military action by the US and against the Houthi rebels of Yemen in the Red Sea. We've also been getting some news that a number of the shipping giants, and I think Rufus must have posted about this, like Maersk, like CMA, CGM, some of them have been pausing on moving their cargo through the Red Sea because of that. And of course, the other thing that we've also seen this year, and of course, even when you look on the calendar today, we had the release of the CPI for Great Britain. There is a disinflation trend globally. Okay, there's a disinflation trend globally. Uganda, our inflation is right now at 2.6%. 2.6%. We started the year with an inflation of roughly almost 9-8%. That inflation has reduced tremendously. And I'm thinking the same trend over in Kenya. Same trend in the US. Now, a lot of economists and traders have been indicating that the Fed seems to have stabilized the economy and brought down inflation without causing any kind of what we can say a hard landing. But now something that we are not yet certain of is it possible that the hard landing is delayed? Because if the hard landing is delayed, then we might have the impact from the rate hikes not happening this month, but possibly January and also into the year. As we know that, especially over in the US, we are going to have elections next year. It is likely that we are going to see inflation up fairly strongly in the US, but also we might we might also get inflation slowing down, especially now that we are seeing, that kind of general trend of disinflation. When you look at the data for Great Britain, something that got my attention is that when you look at this CPI month over month, you will notice that it has gone into negative. Okay, it's gone into negative. Here we have 0.0%, and now we have negative 0.2%. That's disinflation. Earlier in the year, a lot of data that was coming out from China got a lot of traders kind of worried because we saw that there was actually disinflation in China. And if you have disinflation in China, it of course gives you some kind of a hint that maybe we might also have that now spilling over to the other parts of the world. Now we are starting to see that. At first, the issue was UK's inflation is way too high, okay? But now when you come over and see what is really happening, you notice that actually, yes, the inflation is fairly high, okay? And now it seems like it's now come down way too much. We're now back to 3.9%. When the Bank of England began tackling this inflation sometime last year, you can see we have moved from around 11% back down to 3.9%. So for those that are trading GBPUSD, of course, theory will tell you that when inflation of a country declines, it usually boosts the real value of the currency, okay? But also, and that's why sometimes you need to be careful, especially when you're using some of these calendars. They will tell you that when inflation reduces, it means that you could potentially get a weaker pound, which of course is the case. But now you have politics involved. Rishi Sunak came up recently, I think about 2-3 months ago, and indicated that earlier in the year, we had inflation fairly high. What are we seeing now? I've managed to bring down inflation I've actually managed to cut inflation in half. Okay, that's what he said. Because you see now, beginning of the year, we are here, 1st of January, 10.5%. The time Rishi Sunak spoke, we were somewhere around, I think he spoke in November, you see, 4.6%. He's brought it in half, okay? So what does that mean now for the investing community? Most likely, investors are going to bring their money back into the UK, okay? Seeing that now there is that kind of stability in pricings, we're not have prices rising too high, okay? But now at least we have brought them down to moderation, okay? So if you see GPP recovering from that sell, don't be surprised. It might have some of those factors in play, okay? So the other thing that I also want to speak about as we go, before we go over for the charts, as something that's important, is I want to speak about the US 10-year, okay? And also about of course, this is the nominal yield for the US 10-year. You can see that it's been dropping fairly strongly. So we had it at 5%, okay? And of course, if you come and you add US inflation, okay, if you add US inflation, which is here, okay, Let's see if we can manage to add it. I don't know if we can manage to get it, but let's give it a try and see. Okay, so it is here, right? That's the inflation rate for the US. Now, something I need to mention, okay, is of course, the reason why the Federal Reserve had to start hiking rates is because they needed to lift off from the era of negative rate, rather the era of close to zero rates. That was during COVID, if you recall, okay? So now the thing that we have to look out for, especially for us who are going to be looking for swings, if you're looking for swing trades, you need to make sure you monitor what the real yield is here. So for you to get the real yield for in the US, what you're going to do is you get the current yield, which is the nominal yield, and then you subtract it from the inflation rate. So right now, the US inflation is about 3.1% headline. So if you get this 3.9 and you subtract it from 3.1, you get about 0.8, right? Now, what I'm trying to say here is you notice that the 10-year yield is dropping quite strongly. And the reason for that has a lot to do with that anticipation that the Federal Reserve is going to start cutting rates soon. Remember, this is just a rumor. They have not started cutting. We are going to have a time when the real yield is now back to negative. Now, when that happens, it could potentially spell another sort of like risk event. And I'm thinking if there's going to be a potential pullback on the indices, that opportunity is going to be presented when we have real yields crossing back into negative. Okay, that's something to watch. And I'm seeing how the yields have been, pulling back quite strongly. And I'm thinking it's likely that if we continue to see yields dropping, it might spell some kind of a risk there. So the other thing I think that I need to speak about, which of course was important this year, is if we cross over to gold, you'll notice that gold, despite gold having that pullback that it had that took it below 2000, you notice that gold is still fairly strong. Okay, so I don't know whether you guys have tried to ask yourself what is really happening on gold, but there seems to be something happening here. Okay, on one part has something to do with the anticipated rate cuts that are coming in the US, but on one end has also something to do with some of the events we are seeing taking place with the Israel-Hamas conflict. Okay, the Israel-Hamas conflict is still there, and it seems to have now also roped the US in. So the US is actually involved militarily, not really by diplomatic efforts, or they may be just making commentary on the war, but they are now involved, and they were dragged in by the Houthi rebels. Now, what that means is gold may still price in some kind of risk, and traders or investors or money managers or swap dealers most likely are going to still stay exposed to gold. Okay. Now, you notice that gold has two parts it's playing. On one hand, it's acting as a safe haven, but on the other hand, traders are also looking at it as an opportunity to make money. Okay. Right now, we are at 2040. We have the price action has stabilized above 2000 for quite some time, which means that previously when gold has been reaching these levels, it does not even stay there for long, okay? Of course, when you look at this weekly candle, we managed to close around here, but you notice that immediately we went back, now we're back here above 2000. So if you are bear for gold, you might want to be careful because it might be starting some kind of a bull run. If you look at how gold did in December 2022, you will also notice that we ended the year quite bullish, right? It's a general trend for gold, where December is normally a year where traders or investors normally pile up into gold, especially since the new year comes with its own risks, okay? So investors normally would want that they are at least to some extent, safe. You get it, eh? So that's what I'm thinking with gold, and we could potentially see more bullishness for it there as we go along. Let me cross over to silver, and then we can cross over to MT5. If you have any questions whatsoever on any events, any news, anything, please type it in the chat, and I'll be able to handle it once you come to the end of the session. So silver, same thing. We are watching it, how it's trading within this area here. And I'm thinking we also could potentially see silver moving fairly higher towards the end of the year. Now, same thing for silver. As we crossed into January, we had a bull move, and I'm thinking the same is going to repeat. So we should potentially see silver fairly moving strongly higher, or fairly moving higher towards this level where we were tested in December, and also which we also tested somewhere around May. Okay, so that's really it. I think 2023 has been very, very strong year for a lot of things. And I'm thinking 2024 is really just going to build on to that. We are going to see a lot of upside momentum potentially on GBP USD, Euro USD. They are going to be fairly higher in 2024. I'm expecting these currency pairs are going to have a lot of room to run. Keep in mind, when you look on Euro USD, on GBP USD on a higher time frame, before we had the Russia-Ukraine war, this is where we were trading. Russia invaded Ukraine on the 21st of March, 2022. Immediately that happened, pull back. What intensified this pullback on GBP USD last year? It was because Russia told the UK and the EU, if you want to buy any oil from Russia, it has to be in rubles. What was the impact on the currency? Immediate pullback. Because for them to be able to access oil, they had to pay in rubles. We saw a very, very huge sale for the UK. Same thing also for the euro. Very, very big pullback. Now, are we past Russia-Ukraine era? I can say to some extent we are. The war is not done, but the impact on the war has on the impact of the war on the UK, on the EU has receded quite fairly. So we should see the currencies recovering and going back to where they were. Now, the other event that we have is also the US election. If you look on your charts on what happened in 2019, you will also notice that in 2019, we also had GBP/USD starting to move and trend higher going into the election year of COVID. Okay, so the same thing is also going to happen, and we should see it moving gradually higher. So now let's just quickly review the USD pairs. The USD pairs. Okay, what do we expect with the USD pairs? So one thing that we're aware of is we are having the US election next year. Okay. The other thing also is there seems to be some kind of trend where oil prices, despite the influence and of course the impact of OPEC, oil prices have stabilized lower. Sometime this year, we seem to have had that kind of indication that maybe oil was going to head back to $100 a barrel. That's WTI. Here we are, oil is trading at $74. Borrowing from my knowledge on correlation, what that means for the USD CAD is that either we have the USD CAD selling despite oil prices also pulling back, or we have USD CAD being, I think, the only pair that may actually stay or hover at these levels here. Now, if we go and see how USD CAD did in 2022, you notice that the movement that it had higher had a lot to do with the Federal Reserve starting its rate hike regime. Every USD pair benefited from that. Every USD pair. When the Federal Reserve started its rate hike regime in January 2022, when they announced that they are going to start cutting rates so that they could move away from their era of negative, rather from their era of close to zero rates in the US, that is when USD woke up. And we saw that the entire 2022 and 2023 USD CAD stayed fairly strong. Okay, so going back to where we were in 2020, you notice that the pullback that we had on USD CAD here had a lot to do with the rising oil prices, rather the oil price is going to negative, okay? And we saw this pullback also happening around this level here, okay? So I'm thinking we should see, especially into COVID year, or rather, especially into election year in the US, we are going to see USD CAD moving higher and potentially back to 1.42, 1.40. Okay, so let's now look quickly at NZUSD. So for NZUSD, same thing is also likely to happen. We are going to see it progressing higher, potentially back to 70 USD, 70 cents, and even higher, okay? And that has a lot to do also with the US election, but also possibly that we are going to get some fairly strong weakness for the dollar in 2024. Yeah, so I think that's really it. Now we can look at the charts, rather look at the calendar and see what's happening today and what we can try to, to utilize for opportunities today. So for today, I don't think there are many events. I think, yes, we have the crude oil inventories, which are going to be released at 6:30 today. And then we also have the German PPIs, okay, those have been released. The CPI event for the UK, very nice trading opportunity. And we saw that there was actually a pullback, as we will see on the charts. But I'm still inclined to think that that pullback may not sustain. Something I mentioned earlier regarding the dollar weakness and also the positioning for the pound. I would say banks might be switching over to net long, okay, going into next year, especially due to that risk on, mode that we are seeing in the markets. So we have some data. Tomorrow we have the GDP. Tomorrow you'll be with Rufus. I think you have GDP tomorrow. Will be a very, very nice event for trading. And I'm sure there should be a lot of opportunities from there. So let's cross over to the charts, see what is happening, and then we can call it a day. Okay, so let's start with GBPUSD. So for GBPUSD, we are going to look at it on a 1 hour time frame. So just cross over there, guys, and have a look at it. This is GBPUSD 1 hour time frame. Okay, so GBPUSD is still in a fairly strong uptrend. Okay, you can see sold off from the peak of the year, which was around 1.31, and we got into a consolidation between September to October, and in November we began uptrend. Okay, so from the Federal Reserve Conference, which was somewhere around here, we had a nice bullish flag that presented a very nice opportunity to buy. Those of you, of course, that were on the virtual classes we were having in the morning, I think I gave this very nice setup, I think on Wednesday last week and Thursday for buying the pound dollar. So despite the miss on CPI, I'm expecting that pound dollar is going to still move higher. We might have a bit of a pullback, potentially back to this level here. And of course, we might also potentially create another lower high, rather higher low, around this area here, which maybe could happen sometime either this week or next week. But I'm thinking we are going to go into January, possibly above 1.27. If we get any kind of involvement of Rishi Sunak in commentary about the economy and about inflation and any of that sort of thing that we normally see with Joe Biden over in the US, I'm thinking we are going to see some bullishness for the pound, and we could see it moving fairly higher. But for now, the trend is fairly indicating that there is still potential for the upside. The 5-day moving average is still fairly strong above the 200-day moving average, indicating to us that the upside potential is still very strong for the pound, and we should see it possibly moving higher. Now, I'm thinking when you zoom out, this is the level that the pound is looking at taking out in at least by the end of the year, this level of 1.31. And it might be easy for the pound to do that, especially if we get any kind of disappointment on the GDP for the US. There's going to be a nice pullback, rather a nice move higher that could take us back there. Now, crossing over to the Dow has been like a juggernaut, okay? It is moving higher and higher and higher. And of course, the reason for that has a lot to do with, on one hand, there is that very, very heavy anticipation of rate cuts. The rate cuts haven't happened yet, but because the market is forward looking, okay, it is already pricing in those rate cuts, okay? And I'm thinking, should this continue, we are going to see a much stronger move higher that could take us possibly maybe to 38,000, and then we can have a pullback. Now, since the VIX seems like it's not going to wake up anytime soon, you can see the upside momentum is quite strong, okay? Quite strong. If we get a pullback, the last time, of course, due to seasonality factors, usually when the indices have a Santa Claus rally, seasonality says that in January, they normally have at least a pullback of between 5 to 7%. A pullback of 5 to 7% puts the Dow between 34,800 to around 35,200, okay? And I'm thinking that should allow it maybe to have a healthy pullback before it resumes its upside. But for now, I would stay fairly bullish on the Dow and see it possibly moving higher. Now, the Nasdaq, as of this morning in the Euro session, seems to have pulled back. I think you can see that spike down there, and we should potentially see it possibly. Maybe if we manage to break this 50-day average and stay below it, then we might see a pullback on the Nasdaq that could at least take it against seasonality. A pullback of 5% puts the Nasdaq somewhere upwards of 15,800 to 15,900, and we should see it potentially doing that. Now, the other thing that I've noticed is every single time we have candles like this, they normally end up in liquidity grabs, okay? They end up in liquidity grabs. We saw the same thing happening here. You notice that we're also seeing the same thing happening here, okay? So I'm thinking this candle also might have volume immediately taking it higher. Now, the thing that I also need to mention on Nasdaq, which is very, very important for you guys, is many of the tech stocks are now on full bull mode. And the reason for that is because usually environments of rate cuts favor tech stocks, but also when inflation is low in the US, the tech stocks tend to benefit. The reason why we had the Nasdaq in a bear market the entire 2022 had a lot to do with the very high inflation in the US. Now that inflation has normalized and it's now back to levels that the Fed would say fairly good and on path to their longer term target of 2%, that would now allow the Nasdaq to benefit much, much higher. And we should see it breaking to higher levels. Now for Euro USD, of course, I was bullish on it for the Federal Reserve Conference, and I'm still fairly bullish on the euro. I do not see the euro selling anytime soon, and of course, it might sell a little bit, But of course, every single sell is most likely going to be bought up very quickly. Now, I'm thinking, especially as we go into next year, and of course, for the larger part of 2020, for the larger part of 2024, the euro is going to benefit from upside, okay? And that upside is going to have a lot to do with the potential elections in the US. So if the elections happen in the US, then we should see the euro benefiting because the dollar is going to have a pullback on that weakness plus also the rate cuts. So GPP JPY, very nice uptrend. And of course, this uptrend of about 300 pips was because of the Bank of Japan conference. Very nice opportunity to trade. I hope you guys are able to make money on. I'm seeing in the chat we have GJ Assassin. GJ Assassin, how are you doing? I hope you're able to benefit from that move that was there on GJ yesterday. Very nice move of almost 300 pips. I don't know if you guys were up at 5 a.m. You had to be up between 5 a.m. and 6 a.m. because they had their rate release around, I think it was about 6 a.m. It's about 6 a.m. So right after that, we saw a nice, strong move higher. Now, Bank of Japan have not indicated when they are going to end their negative rates. So the pullback that we had from the beginning of December is going to be completely, we are going to recover most of that move. So you can see from beginning of December, this is where we were. We now stand here. That pullback is going to be absolutely recovered, and we are going to see GBP JPY progressing back to this level here. So until the markets get indication from Bank of Japan that they might normalize policy, then we're not going to get any weakness, okay? So every single pullback is going to be a move higher, and we should see it pushing back to these levels that we're at around beginning of December. So that's really it. I'm just now going to handle the questions as we call it a day and a year. Just Squad, how have you been? Thank you, Just Squad, for always taking part in the snapshots. I hope it's been a great year for you, Just Squad, and you've been able to profit, and you're happy with the year, and I'm sure that you're doing amazing there. Victor, you're saying hello. Can you do a market analysis on AUD USD? So AUD USD, fairly bullish. Euro USD, same thing. Now for AUD CHF, the Swiss National Bank indicated that they are not going to do any more rate hikes, and I'm thinking that, of course, will allow the Australia dollar to benefit, since, of course, the carry trade in this case favors the Australia dollar. We should see potential upside there. Hi, Apollo. Again, thank you so much for always being part of our market snapshots. Jude, also, yes, you've also always been attending our physical classes and the virtual class. So I hope to see you in action as well next year, and we can have more more engagements as we go along. Yeah. And of course, for those of you that are not aware, I'm on Twitter. So you can always reach out to me, follow my commentary on Twitter. I think Apple, I don't know whether we connect on Twitter, but I always have a lot of commentary there. So you can always go to Twitter, check through, and we can always engage from there and discuss the markets from there. Okay, so Apple, you're saying hi, NK. Did you say Powell talked of rate hikes? I think I had rate cuts. No. Powell actually spoke of rate cuts. I mentioned rate cuts. And of course, the rate cuts are just projections. And they said that they might, he mentioned indications that since inflation is moving in the path that they expect, now they might be ready to consider a shift in policy. And of course, since the dot plot also indicated that Fed members had had that discussion of rate cuts. That is actually why the market rallied the way it did. And I'm thinking we should see more of that in 2024. How do you determine for how long will the market sentiment last and the market still fizzling out? Yeah, I think I track the market sentiment I track the market sentiment using the VIX, so the S&P 500. Of course, the S&P 500 VIX tracks the movement of the S&P stocks. So if the S&P stocks are moving, the VIX normally be negative, and if they are losing, and the VIX will be positive. So usually what happens is the VIX is used as a gauge, and now the industry or the markets are now using that VIX. So should we see a jump in the VIX, then we should see a potential pullback on some of the indices. Yeah. There were some comments by some Fed speakers last week, like Fed Mester, who indicated that the way the market has reacted to that issue of the rate cuts is beyond the expectations. But of course, the markets cannot, pull back because of that. I'd earlier thought maybe some comments from the Federal Reserve Committee members was going to have a pullback on the indices and the risk on assets, but we didn't see that. So I think the Santa Claus rally is very much in position to happen in 2023. Yeah. Risk on risk of sentiment on stocks, me thinks is overdone. Yes, that's true, Apollo. I think I can agree with you on that. It's overdone. Yeah, it's really overdone. I think, yeah, but again, the fact that the Fed is changing policy for the very first time in over 2 years, we shouldn't be surprised with the kind of moves we are seeing. Okay, it shouldn't come as a surprise. Yeah. Brian, you're saying when the Fed cuts the rates and the Eurozone cuts rates, what will be the greater outlook for Euro USD? So in this case, it will now be a matter of the pace of rate cuts. If the Fed is cutting faster than the Euro, then most likely the Euro now is the one that benefits. But away from the rate cuts, you're focusing more on the value of the dollar and how it usually pans out in election years. History will tell you that in election years, the USD usually does not perform that strongly, and we should see it really giving way, regardless of the pace of rate hikes or the pace of rate cuts in this case. In regards to gold, methinks bullishness not confirmed since PA hasn't taken out any recent low on the daily time frame. On the contrary, I feel price may test the week's OB and drop. Yeah, yes, I think gold still the bullishness might be, I think, limited quite strongly since a lot of those levels there's not enough liquidity and order flow to take price much higher. But we should see whether the market, since now by far and large most assets are now trading in uncharted territories. As a trader, you need to be dynamic. Okay, if you see surprises, do not think that why is this happening? It shouldn't be happening. No. Now we are now making history on many things. On gold, history has already been made. Indices, history has already been made. So more history is being made on many things. Even commodities like orange juice. Orange juice has been at the highest level ever that it has ever been at, ever. So if you see history being made, don't be surprised. Just see how you can use the opportunity and make money. Cheers, guys. Apple, you're saying, what's your X handle? My X handle is Norbert K Barije, and you can find me on Twitter, and we can engage for more commentary and also for posting of the classes and all of that we do. Okay, so guys, I wish you a very, very Merry Christmas. Merry Christmas, guys. Thank you for always being part of these classes. I appreciate them for being part of the Snapshot. Thank you so much. And I hope I've been of help to you guys. And let's keep engaging. Let's keep engaging. The year is not yet done. We still have Christmas, of course, next week. But after that, we still have some trading days. So if you see an opportunity, don't miss out on it. Make sure you utilize it. So guys, enjoy yourselves this festive season, and we'll meet again next time. Cheers, guys, and we talk soon.